Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and the top stories are too many moving parts. U.S. banking rate outlooks as well as the finance bill changes. A weekend ahead keeps the stocks ranged. IT ekes out gains while metals slip.
Amendments to the finance bill do away with indexation benefits and lower long-term capital gains tax and debt funds. The move to tax gains from debt funds at the slab rate hurts AMCs.
Campus active slumped 7% after 2.5 crore shares or 8.1% equity worth 861 crore changes hands at an average price of 349 rupees per share. Sources tell CNBC-TV18 TPG Global is likely to have sold stake.
Hindustan Aeronautics rallies over 4% with the offer for sale retail portion subscribed 19 times as of 12 p.m. Okay, all right, those are the top headlines, but what a day it has been. Markets are sitting back, looking at all the finance bill amendments that have come by. The finance bill is passed as well. And big updates that we've gotten from that. It's almost like a budget day, right?
Seriously. So I'm just glad it's a Friday, right?
Yes, that's making up for all.
You need those 2 days to digest this and recover from this day.
Yes, and as I said, markets absolutely flat, not much action there. We did recover from the lows. Then we saw some volatility. Right now, it's a 9-point downtick on the Nifty. Mid-caps are underperforming, down around 170 points. But of course, the biggest story has been the amendments that we've been talking about, getting it, analyzing it, and talking about it.
Okay, so let's get straight to it. So the amendments to the finance bill will do away with the indexation benefits and lower long-term capital gains tax on debt funds. This news comes in as a positive for insurers. What do the numbers look like? Surbhi is here with the details. Surbhi.
So we've all spoken about how it impacts the industry. Now let's look at some numbers in detail. For the life insurance space, investors now may prefer life insurance products over debt mutual funds if their annual investment is up to 5 lakhs, as that is currently under the tax-free bracket. For above 5 lakhs of annual investments, policy and debt funds are at near parity. When you look at their IRR, which is the returns over the 10-year period, the non-par guarantee savings linked products, which was under the limelight post the budget announcement, will generate a return of 6.5% to 7%. And debt mutual funds, post this finance bill announcement, will generate a return of 5.5% to 6%. Now here we've considered a marginal tax rate of 30%. Post-budget, analysts estimated that there will be an 8 to 10% loss in APE from April 1, and also the APE for March will grow at a rate of 15 to 40% as opposed to 5 to 10% last March. Now, post the finance bill announcements, analysts estimates that there will be a lower loss of APE in H2 of FY24. They may see a pickup in sales in the ULIP products, and also within that, SBI Life may do better as they have a higher exposure of debt-oriented ULIPs. Now let's look at the valuations of the life insurance players. Pre-budget and current valuations, they have seen a significant corrections, where HDFC Life has seen the most corrections from 3.8 times price by embedded value to 2.2 times on an FY24 basis, followed by Max Financials and ICICI Pru.
Thank you so much, Surbhi, for joining us with that analysis. Definitely, insurance stocks are in focus today on the back of this news. It was an expectation there could be some relief for insurance stocks, but it has come as a shocker for the debt mutual fund industry. But also, NBFCs on the back of this update is in focus. Abhishek is here to tell us how NBFC stocks get impacted with this move.
Well, NBFCs do tend to borrow a lot from debt market. Thus, mutual funds are in focus given the fact that borrowing profile mostly via NCDs include a mix of secured and unsecured NCDs. So NBFCs borrow anywhere between 15% to 45% via NCDs. So I spoke with few people. One of them said that, X of HDFC Limited, a couple of NBFCs form 60% of the total borrowings in the NCD market. So NCD borrowings include participations from mutual funds and banks. The breakup is not there with us with respect to how much is of a bank and how much is from mutual fund. But a large portion over there is from the mutual fund side. Lowest borrowing via NCDs is for Canfin Homes, around 15%, and NBFCs like Five Star and Sundaram Finance, they have 45% of the borrowing mix coming from NCDs. Back to you.
Thank you very much for that. J. Kumar has won some orders, 250 crore rupees. We'll slip into a break on that note. On the other side, we'll talk market technicals. Hemen Kapadia, KR Choksi Securities joins us next.
that? Is there parity equity that the government is looking at?
Heavily taxed?
Yeah, I mean, debt mutual funds are it's going to be under the LTCG gone.
Isn't it interest? What do you get in debt mutual funds? You get share capital gains, or you get debt interest.
So is there parity and equity that we are looking at?
Parity with instruments which are of a similar nature. Income earning instruments should be treated as income earning instruments, and that is the direction in which it has gone.
Thank you, sir.
Thank you.
Okay, some commentary coming in from the Finance Secretary where they say they want to bring parity from interest earning or income earning instruments, and that's why this amendment as far as debt mutual funds is brought in this finance bill as well, which has been passed now. We'll keep discussing this, and of course it needs greater analysis as well. For now, we'll stick to markets because now we've seen some fall from the top. Nifty is down 55 points. Markets have taken a turn for the worse. So let's get in. I mean, it's a sharp fall from the top actually, and it is led by a number of sectors. So we'll do one thing. We'll talk about markets in greater detail because there's been a sharp fall in just last couple of minutes. A lot is happening as far as the STT increase that has come through as well. We need more clarity on that. But title is at the day's low. Wipro, TCS, Britannia, NTPC. All these stocks have fallen from the highs, and there's a sharp fall in just last couple of minutes on the Nifty. So it's a good time to get a technical check on the markets. Himeen Kapadia is joining us for just that. Himeen, a sudden move after a lull that we saw throughout the day today. What is your chart suggesting?
Well, frankly speaking, we're in a range between 16,850, 17,200 on the upside. Over the last 1 week or so, last 7 trading sessions, we've seen the Nifty make attempts at breaking on the downside. That's not worked. We've seen the Nifty make an attempt to overcome 17,200, but call writers have been strong. So 17,200 doesn't get taken out. And now some other mechanical indicators on the hourly charts have given a crossover sell. Currently, we spent 5 hours in a very tight range, and now we're just beginning to get weak. So in the extreme short term, I guess the market has lost momentum anyway. There's not too much of participation. Excuse me. We've gone nowhere. Yes, if things are to improve, I think firstly Reliance needs to turn. Reliance has made, I wouldn't say a double bottom, but taken support at the previous bottom of 2180. That's very important. Reliance holds. In the next couple of days, we see stability and a bounce back. So firstly, if 17,000 holds and Reliance holds 2180, I think then we look at something from a slight positive point of view. But this negative hangover, I think, could remain for a day or two more.
Himeen, right now we are holding above 17,000 and Reliance Industries share price is above 2180. So at the current juncture, would you go long?
Frankly speaking, I would wait just a bit. The picture in Reliance is improving. Just give me 30 seconds. I'll give you a couple of data points. We went to 2180 somewhere 6 months ago, and which was somewhere in March 22. So that's almost a year ago. And now once again we've come back to 2180 a few trading sessions back. But this time around we've seen volumes of 1.5 crores at that low, with 72% delivery marking. Those levels have held. So I would say if it happens at 1 year low that previous supports, logic says smart, it's stronger hand which are bought. So I'd wait just a wee bit more, maybe 1 day more. We don't break 2180. I don't think it will, but it doesn't. One can write 2150 puts or then go vanilla futures. I have a feeling in the next couple of days Reliance should stabilize, and that should help the market too.
Okay, and any individual stocks that you are looking at this point in time?
Yes, I would ideally say don't do anything. Market's going nowhere, but a couple of stocks where you see some price action. Firstly, I have a buy on Kotak Mahindra Bank. Oversold, positive divergences, crossover buys. We saw a huge volume spike coming in on 14th March, and those levels have held. Those were lows, and it's in the process of bouncing back. So buy Kotak Bank at Kotak Mahindra Bank at 1700, stop loss 1675, target 1750. Secondly, the other stock is SBI Life Insurance. Same logic applies. Oversold. MACD, RSI, stochastics all have given a buy on the daily chart after positive divergence. Stock seems set to make a higher top, higher bottom. Bounce is underway. So SBI Life at 1110, stop loss 1085, target 1160.
Amy, thank you very much for that. Let's get an important voice from the corporate world. My colleague Shilpa Ranipeta caught up with Kaushik Chatterjee, CFO of Tata Steel, to discuss steel prices, global macro conditions and the impact on business. Listen in.
Well, I think last year we had a lot of challenges, both in India as well as globally. But I think as we see now with China opening up, US doing pretty good, I think we are in time where steel prices, the low of the steel prices may be behind us. And we have a very strong demand drivers, especially in India. And India will continue to grow as a country. Investments are happening in infrastructure. There's a huge capital allocation that has been given. And steel is a foundational sector for the country. So you can make your own judgment. Yeah.
What about the steel demand in Europe? What's the scenario like there?
It's stabilized much more than what it was. As I said, the war in Ukraine had a disruptive impact.
Right.
There was also impact on the gas prices and energy prices, which is kind of getting stabilized, not to the level which it was before the war.
Correct.
But at least the volatility has smoothened a lot. And we'll see as to how Europe recovers from the impact and how does the long-term effects of the war get priced in as far as industry in Europe is concerned.
You said strong demand scenarios in India, but what about the export scenario? What is that like at the moment?
Actually the Indian steel is largely going to be absorbed in the country if the infrastructure spend is there. There is a certain amount of exports that happen. Exports are also healthy and good, but the focus is always on domestic consumption.
Get into a break. On the other side, we'll get you more in the markets. Welcome back. 17,000 is holding on the Nifty, but we have reversed some of the outperformance or gains from early morning. Life insurance companies are having a good session. So HDFC Life is now back in the green this week. It's seen a rally of 6%. SBI Life, minor red tick for SBI Life. But, if you pull up the performance this week, it's seen a gain of close to about 4%. Now, the returns of many of the saving products of life insurance companies are looking more attractive compared to the debt mutual fund product, considering the tax angle of the debt products has now been taken away, the tax benefit. So that perhaps is boosting the appeal of life insurance companies. But let's talk about another stock. Indian defense manufacturer Data Patterns has delivered yet another missile checkout system to BrahMos Aerospace. In a chat with CNBC-TV18, Data Patterns chairman and MD S. Rangarajan told Jude Sunnit that the company is banking on transitioning from building subsystems to end-to-end systems in order to push up its top line to several thousands of crores. Listen into that exclusive conversation.
Understand that the checkout system is not really part of the missile system. We are 75 to 78% indigenous on the missile system. On the ground system, we were always almost 100%. The element which was missing was the checkout system. And that is what Data Patterns took up as their challenge, along with the BrahMos specialists and a few people from DRDO. They have totally indigenized it. It's been a very, very hard struggle initially to understand what are the requirements, because we have created it without requirements. Now we have the requirements and we can tell other people this is how checkout systems for a missile should look like.
Right.
It's a modern checkout system, and I would say state-of-the-art checkout.
And no, I have to then ask you, what does this do really to the partnership that you share with BrahMos? I believe the order book is ever expanding. So if you could just tell me as to how this fits in with the kind of business you've done with BrahMos over the years, Mr. Rangarajan.
We started with fire control systems for Army and Air Force. Only Army first. Then Air Force, we started giving the fire control system on the ground-based systems. The second, we indigenized this checkout. This is the second part of the journey with BrahMos. The third part of the journey was when the air version of the fire control system, which is going to be fitted into Sukhoi 30, we got a contract in early 2011, 2012 to build this for Sukhoi 30 fully indigenously, without any equivalent in the Russian space. We outfitted the missile underbelly to Sukhoi 30. So they went through a lot of development work, both in HAL, BrahMos, DRDL, and data patterns. We delivered that. And then the fourth one we started is a seeker for BrahMos, which is almost completed now. We're expecting flight trials to happen. We have already done the combat, under Sukhoi 30 belly, we have flown it. Now the missile trials will be expected in the next 3-4 months' time.
Right, all right. The big news that everyone's talking about now is the clearance of 70,500 crore worth of defense contracts that the centre has cleared, for the future. I have to start by asking you, what does that do to your order book particularly? I know for a fact that BrahMos figures very prominently as part of that news. So how does this help business and orders on the BrahMos front?
Yeah, it's an AON granted by the DAC. We still have a lot of water to flow under the bridge to get the contract, which should come by hopefully middle of next year or end of next year. It's a large contract with deliveries going right up to 2032.
But I also have to ask you on the export front, there are some very exciting orders also going by, the NATO order being one of them. What is your outlook in terms of export business and where do you hope to go from here?
See, today we are doing subsystems. So there is not, really not focused on exports. We do about 6-7% of our turnover in exports. What we are aiming to do is build complete equipment, complete systems. Once we start doing that, that is when the export really will start happening. So I see this in the next 3-4 years. We see that once we build systems for MOD here and our services, the same or modified systems can get exported with Indian permission, Government of India permission.
Well, out of time on Midcap Radar on that note, but do stay tuned in. We've got a special mutual fund corner coming up where we will answer all your questions. If you have any related to the latest announcements, given the finance bill amendments on your debt funds, do write to us and tune in to the show.